Mortgage holders could face yet another rate rise as early as next week after inflation unexpectedly jumped 6.8%. Joining us now, Judo Bank's Chief Economic Advisor, Warren Hogan. Warren, good to see you. Thanks for your time this morning. I got to say, I coughed up my wheat bix when we spoke a few months ago when you mentioned that the cash rate could end up climbing above 4%. Looks like it's going there.
Yeah, good morning, Pete. Unfortunately, it does. I mean, the numbers don't lie, and we've got to get our real interest rate up to around zero, and that is the interest rate minus inflation. And with that number yesterday showing inflation still hanging around sort of 5.5%, 6%, depending on how you measure it, and our cash rate at 3.85%, we've got a deeply negative real interest rate. So the RBA's still got work to do. And I think from the tone of the governor's comments in Senate estimates yesterday, there's a good chance they'll just get on with it and do it next week. I thought they might wait until maybe August, but I think there's a red hot chance they'll go next week. The Fair Work Commission decision on the minimum and award wages that's due tomorrow will be critical.
Yeah. I mean, which way? Before I get to that, actually, how many more rate rises do you think are going to come now?
Look, I've had 4.35% as the peak for most of the last 6 or 8 months, and I'm still hopeful that that will get the job done. The problem is the economy isn't slowing quick enough. We're seeing the housing market in many of the capital cities pick up again. Many of the business surveys are showing a bit of a pickup in momentum in the services part of the economy, which is the dominant part of the economy. But look, hopefully a couple more rate hikes and we'll see some further slowdown in the economy, and this soft landing will come through. That is, the economy stalls but doesn't go into recession, and that'll be enough to get inflation down. But it's still too early to say that with that confidently, but I think that's what the RBA will be comfortable to get to and then stop for 6 months or so.
One of the main drivers is rents. And we saw yesterday some data suggest that there's just not enough new house builds, which is only going to drive rents up, right? So what's the answer there?
Well, unfortunately, in the short term, the market will determine outcomes. That is, rents will go up. And as the governor said yesterday, that will force people to share, young people not to move out of home, i.e. the number of people per household will have to go up, because the ultimate solution is that we build more houses, and we will build more houses in this country in the next 3 to 5 years. But that's the time horizon you're thinking about when you're thinking about housing supply. It's not 12 to 18 months.
Yeah, so just on that point there, I mean, there's been a bit of blowback on Philip Lowe for making that comment about people having to stay at home for longer. But I mean, what are your thoughts on that? And was he making the right point, just saying it the wrong way?
Yeah, well, I think what he was trying to do was, rather than sound like sort of a typical economist and saying prices will go up and leave it at that, he was trying to sort of put the human context around it, the context of what it means in our community, which I think is important because it's about communicating to people. And of course, it's not a failure of the Reserve Bank. It's a failure of our governments not to plan. And also, unfortunately, it was the pandemic, I think, threw the industry out. So, but look, I think it's the right thing for him to do, to try and put as much context around his economic analysis as possible so that people understand what he's talking about, even if they might be a little bit offended by what it all means.
Yeah, and you made this point about the minimum wage increase tomorrow. Where that lands, we're just going to have to wait to find out. But, I mean, is there a right number here? How much would the Fair Work Commission be influenced by what the RBA is saying or what Philip Lowe is saying?
Well, I think at this stage of the game, the RBA going a couple more times is pretty much locked in. I think if we get a high Fair Work Commission decision tomorrow, it'll probably just mean it happens next week rather than in a couple of months.
Right.
But I think the Fair Work Commission just does know that if they start putting up wages by 6 or 7%, we're not talking about 2 more rate hikes. We're talking about 4 or 5. We're talking about having inflation entrenched. So they're going to be mindful of that. I think they'll go with a 5% number, and I think that's fair enough.
Wow.
But anything above 5%, I think, is a problem.
Okay. Warren, good to see you as always. One day we'll talk about better news, One day. but not now. Talk to you
Thanks,
soon.
mate. Cheers.